Good morning, everybody. Sorry, good evening, everybody. Today is 4th of October. Uh, People have few doubts to understand on the market structure clearly. So before that, I would request everyone to please subscribe to the channel. This will help you to get the notification in time when in the live market, we are sending you the market structure development or the trades happening, as well as post market is done. I'll share some kind of videos. So you get that notification and it will be helpful for you to react in a time. Okay, also like the channel if you feel it is good. If you don't like it, also is appreciable that I will improve myself. Just put a comment. Even though you want to share any thoughts, any doubts, please put a comment. I will try to reach out to everybody. Thank you so much. So let us move on. We will just move to our basic structure of golden, how it performs, right? So let us look at it on the sell side first. When the market is very bullish, you can see the markups happening with higher highs and higher lows. So when the market is in exhaustion period, you can see 3 consecutive peaks. And the third is signified when there is a break in the low of second push up. This becomes 3 when this low is taken out. This is the first peak high. Now the peak formation is based on the closure of the candle. If I have a candlestick with a rejection candle having a tail above, then there has to be a single candle closing above that to become a second peak, right? The second peak formation, after that there will be a pullback. That pullback should not be taking out the low of the first one. In case if this is what happens, so this is not first peak, this is not second peak, because the low has been taken out. If market goes back from here and makes a higher third push up, so for our structure, this is not third, this is not second, right? This low has to be intact for the first one. And this low should not come down below the low of the first one to form this as a first peak, a valid first peak, right? So this peak has to be above. Instead of this is the wrong one. Market should give us higher lows, and then third is should be able to take out the second one. So this is the valid 1 and 2 peaks, and then third peak. Okay, so this is wrong. All right. So we should have higher lows. There should be break in the structure. Should be break in a structure when the low of the second push high is taken out. From here, we have to wait for the market to come on the high area. This is the area. There will be a wick with the tail above. When you see in the line form on the charts, it is always on the close side, right? So when you bring it back on the candlestick charts, you can see the wicks. So you can draw a line from there. So that is the area. So when there is a breakdown here, markets will try to come up and test this area. Allow market to test this zone at least for 3 times. It can go above or it can start testing below. So let's say it has passed this area of resistance of the second high, but it should not be taking out the high of third. So every climax of action should happen within the high of 3 and this zone. Okay, so this could be first push up, then there can be a pull down, second push up, pull down, third push up, and pull down, and then market can just drop down. Okay, your first target is always the one which has taken out the low of the second. Wherever it forms the low, that becomes your swing low. This is your first target. Then consecutively, if this is quite lower low here, let's say, so this becomes your second target. And then you can start looking at all the lows, swing lows while it goes down. This is the way the market can perform in a scenario, right? So you have to take entry on the third test of the zone. I recommend only third because sometimes market will react on the first instant itself. We are not interested to the sell market if this is what the market does. Okay, there are opportunity to sell with the candlestick patterns, but instead I would always recommend Wait for the third test. The reason behind the experience is, okay, look for a candle here. Usually I look for this kind of a pattern, a rejection candle, could be a bullish or bearish, doesn't matter, color doesn't matter. The highest priority is I should not have a tail. This is one. Second is same thing, any candle with a very small tail on the low, okay. But if this is your second rejection candle, but if some candle have a bigger tail, not interested in this. All right. So look for something. This is the first. Okay. This is your 4-star candlestick. This is your 3-star. This is your 2-star. May work, may not work. Okay. All right. So what do we do? Once we have our rejection candle, we need to see a close below the low of this. And this candle should not take out the high. This high should be always protected by the engulfing candle. This is called the engulfing candle, closes below the low of this candle. Okay. And it should not take out. So let's say it should not travel there, just take out the high and then come back and closes below the low. So this will not be valid. The high should be protected. Okay. Once this candle formation happen at the third test, you can go selling here. Sell here, your SL goes above this, and your target is the first swing low and then consecutive sequence, right? This formation can happen on the first test itself. It can happen on the second test itself, but I will recommend always go on the third test. Highly reliable. The first target, it is always achieved. I have seen that in the market, it hardly hits the stop loss. Whenever it hits, we will make the video. Okay, and we are not worried about that because I'm going to only give away around, let's say 20 to 30 points, depending upon the rejection of the tail. But my reward is more than that, maybe around 1:3 or 1:4. So I'm ready to give away 20, 25 points in return of 60 points. All right. So master the structure. More important is learn how the structure develops in the market and start thinking like a businessman, because I do not want people to go with a hard coding in their mindset that if this appears, I will wait for SL to hit or I will wait for market to go and hit the target. No, this is only to signify that the structure of the market has changed. There is a possibility of a reversal, and there's a possibility of building a good trade to get a risk and reward ratio here. But yet, market can play you out in a different form, right? So let's say you have already taken an entry here. You have got your signal candle. You have gone selling here. Assume that, and you have a sell here. All right. Now this is your target. If market is not reaching to your target, it's not accelerating very fast this way, right? And it holds on to this position with some kind of range bond and working out way up, right? And this formation takes, let's say, around 30 to 40 minutes. Do you think you should be still in the market? Do you think you should be still waiting for a stop loss to hit? No. So this is not the way the businessmen people work, right? Once they start seeing the printing of the candlestick patterns and the structures, right, which is not showing that it is going to go down or go up. It's getting into the range bond and it's trying to spike up and spike down, take people out of the market, squeeze. This is called the squeeze. Okay, when you see the squeeze happening and it is happening over 30 to 40 minutes, the best thing you can do is you can just protect your entry money and you can exit the market at very relevant points before it comes and hits your stop loss. Because after 30 to 40 minutes, two things can happen. It can either go on the upside or it can go on the downside, your target. But I'm not interested in my target after 30 to 40 minutes. because after 30-40 minutes, it's printing up a very volume generating compressed trading for me, not giving me a proper structure, and I'm not in the market. I will get out. Okay. I will not wait for two things. One, whether it is a sell or whether it's target. This thing has to happen within, let's say, 15 to 20 minutes max. 15 to 20 minutes. Okay. So we will see few examples. We'll understand that how this scenario works out. So this is on the sell side. So if you will reverse it, that becomes your buy side. All right. So this is how the buy side will work. Takes out the, this becomes the third low. This is your second low. This is your first low. Takes out the high. Wait for him to come down and test this area. 1, 2, 3. You get a rejection candle. And then you get engulfing. Sorry for my drawing. Doesn't take out the low. Put your SL here. Go for this target first. Then this is second. Then this is third. Got it? Try to learn this pattern. You will be able to make through in the market very properly. And as I'm saying, while it has to go there within 10 to 15 minutes, if it is not going and trying to build up a volume and squeeze here, he can ultimately break out and go to your target. But still remember, he can break down very quickly. So you can come out in the market if it is not giving you in 30 to 40 minutes. Usually I have seen that all my setups will give you within 10 to 15 minutes because the acceleration is very fast. It will just go up. All right, so let us see in the chart two examples. Let me open up the chart. All right. Say, look at this HDFC Bank. Let's go to the Bank Nifty today. My network is very slow. I'm sorry about that. It takes little time to refresh the TradingView website, but we will be right away in 2 minutes. Today we had a trade in a Bank Nifty. We could scalp some points there, 30 points in options on a sell side. Okay. This window has got refreshed. See, this is the daily time frame here of Bank Nifty. It is heading towards the filling up of the gap. This we are trying to see from start of this week. Okay, so be careful. We look for the buy side setups. See, this is what has happened in the morning. Market has given a very huge burst of the bullish candles in the morning. Went for a peak formation. This is the third one. This is the second one. This is the first one. Remember, why did I say how to form the peaks? Where do I get that? So this is peak 1. This is peak 2. The reason is I do not see a closure above this high. Though it is pinned up and come back down, for me it will be second peak. See the low here. Because of these two push ups, this is the lowest low. So this will be the low of second peak, and this will be the low of the first peak because this is lower than the low of this move down of the second peak. This is the third. This is got confirmed as the third peak once this was taken out. This low was taken out. The market took some time to take this off. I usually want the market to come and take it as quickly as possible before making the compressions here. That is very ideal, but market will not behave always that way. This is a break in a structure. Next, we wait for market to come to this high. All right. Second peak high. This is where the market came, right? We are supposed to sell here on a testing of two to three peaks here. This is the first attempt, pulled back, second attempt. On second attempt, market has gone past the high of the third, closed above. Now there is a change in the structure. This structure is now nullified, doesn't hold good now. All right, so we wait for it. We see this push happening, higher highs, higher lows. We will have the consecutive 3 highs for sure. This is what it is. This is third, this is second, this is first. How do we define that? This low has been taken out, right? Here. So we wait for market to come to this high, give us the testing. Where will be our first target? This low, the one which broke down. Okay, so market came down, breaking this. This is the first test, comes back, makes a squeeze here. It always does that. When you start looking at this structure, you'll get familiar with this market price, getting into the square box. The moment it starts doing this, you will start building confidence that it's going to take it on the top side, because he will take the liquidity on the top because of so much of buildup of positions on the highs of small candles, and then later on he'll pull it down, he'll take out everybody. So this is what he does. So after breaking this is the first attempt. First attempt comes back, builds up, second, third, fourth. Now here in the fourth, we have a different candlestick pattern, not the rejection candle, which I am always looking at, something like this. Look at this, a rejection candle with engulfing. But instead, today I had 2 inside bars. Bullish candle, an inside bar, then again inside bar. Break of the low, I have gone selling. My target was this. I am done with the target. I will trail with the rest of the 20 position. 80% is out. My second target will be this. My third target will be this. My fourth target will be this. Fifth is this. Sixth is this. Right? Now market will come here. We never know. Market would have come to second and third. We do not know. Unless and until market goes there, you do not know. But what I know, after I have my setup done, my SL defined, my SL goes above this, my entry has been done here. All right. I know my target. This is the first target. And it took only 6 candle to come there. 1, 2, 3, 4, 5, 6 candle to come there. So it has ultimately taken 6 minutes. Every candle is 1 minute, right? So that's what I'm saying, within 10 to 15 minutes, the target should reach. After that, if it is not coming, market is building up for anything. All right. So first is done. You start trailing it. This high could be your trailing stop loss. You could have got stopped out in the way back up. All right. But I will not keep so much after there is a depth here. Maybe I'll start looking for reversal with the pin bars and all, closing above. Okay. So this was a successful trade. The minimum of first target is 65 points. So 30 to 35 points we made it. This was on the sell side, very quick one. After that, we see the build-up happening. I did not get any opportunity. There was a break here in a smaller time frame, but I did not taking it. It's end of the market. It is making a squeeze towards the up, and then it may fall. All right. People can have a different way to trade this market on a bullish side as well. That is okay. But the golden structure has worked today with the 2 inside candle instead of a rejection candle. Let's see HDFC. This is another scenario which I was talking about uh, in my drawings, so that you can understand that how important it is to be with the market instead of just imagining. Just be with the market and react with whatever he prints on the chart. Okay. Let's see the peak formations. We have a push up run. This is 1, this is 2, this is 3. How do we know that? The low has been taken out. Higher low, lower low than this. This is taken out. Now I'm looking at retest of this high. After the break of structure, this is the first test. Then it comes back in, goes into the channel. Start understanding these formations of the market. This is the bear channel, breaks out of it, goes up, tests again, comes down, makes lower low, takes out everybody from this area. Lots of volume build up here, takes out everybody, comes here. This is third attempt. After third, what we should start looking for? A pin bar with engulfing, right? A reversal candles. This is third, this is fourth, this is fifth, this is sixth. Can you see the sixth one? So this is a good candle, rejection candle, and there's a close below that. So I go selling here. What will be my target? The break of the structure has happened here. This was supposed to my first target. But what ultimately market did before giving me the entry, between my entry and this is the lowest. So I will wait for this to come here. Getting my point? Okay, what has happened now? So we have a pin bar here on third attempt. I'm sorry that your entry comes here. 1, 2, 3. This is the fourth attempt. In the fourth attempt, you get one more pin bar with engulfing. But this is where you get into third attempt. Okay. So you enter here. This was not traded by me. This is 3 to 3.70 as your target. And your SL is somewhere around 1.50, 1:2. Okay. 1, 2, 3, 4. Okay. We are getting on the fourth. So now what do you do? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 minutes pass, market has not gone to your target. Comes back down, goes back up, retest again, gives a pin bar, comes back down. See, by the time market has come to this area, I will just hide this. By the time market has come to this area, you have a history in a play. You have a history and a play. You can see the footprint of the market now. What market is doing? We have two lows, we have two highs. Isn't it the market is going into building up now? Lots of liquidity above the highs and the lows. So he can do two things. He can take out on the top and reverse back. He can take out on the low and go back up. And how much time we have passed here? After our entry, from this candle to this candle, 24 bars. So we are into a trade of at least 25 minutes to 30 minutes, right? So let's play on this. Market breaks down, doesn't go to your target, but it looks like it is going. So you'll be holding your position, which I would have also done, isn't it? In the normal scenario, there's a push down again, comes back up. Now what market is doing? Again into the box. How do we know? See the wicks here, pullback, one, pullback, second pullback, again third stop, pullback. 1, 2 peaks, 2 lows. Still in the box. How much time has passed? 24 minutes here. And then 12 bar here, 12 minutes here. 24 plus 12, 36 minutes. 30 minutes have been passed. Still the target has been not reached. I am seeing a 2 boxes, a stop loss hunting in the down, then again getting into the range. And probably he will stop hunt top and bottom. He can hunt on the top, come down, he can hunt in the below and then go up, right? He can do anything. So let's see what it does. It hunts now on the upside, correct? He came out with the pin bar and goes with engulfing. Now, what will I do as a businessman? My money is at a stake, right? I have already taken an entry. Now it is around 40 minutes, nearing 1 hour of trading, not reaching to the price. If market comes back to my rate, I'm coming. Or else I'm coming out on this candle, or else I'm coming out on this candle. I am just coming out of the market because it's been too long for market to go to the target, first target, right? So I'm not holding this position. Another thing can happen. It can go and test this and fall down. I'm least bothered. What I'm bothered is if I'm able to protect my money, given a time, market is given me enough time to understand that I can protect money. So I'll protect money. Even though this would have been a successful trade going forward if it is breakdown, right? So I would have quit here if I would have taken this trade and would have maintained my position for the next one, isn't it? Let's say ultimately what market has done. Tested again, dropping again. How much time has been passed now again in this fluctuation from our entry? 71 bars. That means 70 minutes. 60 minutes, 1 hour. Now 1 hour, 10 minutes. So 1 hour in the trade, we shouldn't be holding for a stop loss to hit blindly. So start thinking like a businessman. If it is not working in your favor, it is giving you enough time to react. Take a decision, finish your trade with no loss, no profit, make some tax money here, come out before, and then move on to the next setups. Isn't it? This ultimately went back and hit your SL. This is how it is. If you are holding it till your breath of the last, saying that no, either a sell or target. Some kind of a people have this mindset of trading way. That you can do at this position. Once you take an entry, allow 3 to 4 minutes, market can hit your stop loss immediately. and you are out. But after 1 hour of a trading session of the market doesn't take out your stop loss, doesn't give you a target, I think it will be foolishness for you to overlook footprint of the market in the past, giving you a structures built up, saying that, boss, I am looking at any direction now, so you can decide your positions, right? I would better come out of this. But see how the Bank Nifty has done. It has given you only the 6 candle to reach your target. So this scenario happens very frequent. This will be kind of remotely once in a blue moon. You have a 1 hour of a trade after your entry and you're not getting through. Okay. So be aware of the market. Keep your mind presence. Don't blindly trade the market. Learn the structures very properly. Start looking at how market is behaving. This will give you enough data to trade and enough data to manage your trade also. All right. Thank you so much for this video. Well, let's see tomorrow if we have something coming up in the market. I will of course share with you. Thank you so much, guys. Good night and have a nice day tomorrow.